Finally, we're seeing some green in the market, a refreshing change, wouldn't you agree? But is it too soon to celebrate? Probably. There's a big week ahead packed with key developments that could shake things up. The ongoing trade war discussions, especially around tariffs, are still front and center. If we witness any breakthroughs or major deals, this could very well be the week where the next big wave kicks off. On top of that, there's buzz about a potential supply shock hitting the space, which could have a significant impact. I've got a lot more insights to share about that, so grab a seat, relax, and stick around. Welcome to the channel. If you're new here, I hope by the time you finish this video, you'll hit that subscribe button and join the community. Now let's talk crypto. The market's been looking healthier this past week. Finally, some good news after what felt like an endless stretch of red. It's been a rough month, no doubt about it, but any green at this point feels like a win. XRP has been holding strong, making impressive moves off the lows of just under $2.00 yet again, hovering around $2.05 or so. Let's take a quick look at the past month. Early on, we dipped below $2.00, but since then, XRP has climbed from around $1.60 to well over $2.00. In fact, mid-Apple saw a peak at $2.22 before settling at roughly $2.12 as of now. Though keep in mind, I'm recording this earlier in the day, so things might shift. What's even more exciting is the surge in trading volume. XRP's trading activity has jumped by about 68% across the board, signaling renewed interest and momentum. It's a great sign for the market overall. Oh, and by the way, the total crypto market cap now sits at an incredible $2.75 trillion, 0 cents. Bitcoin is making moves up about 3.5%, with trading volume surging by an impressive 85%, almost 86%. Ethereum isn't far behind, with its trading volume climbing nearly 49%. The crypto space is seeing some solid gains across a 24-hour period, and the 7-day trend looks just as promising. Shifting gears, let's dive into XRP. I've been keeping an eye on Fiat Leak to track XRP's activity, and the numbers don't disappoint. Trading volume is buzzing, and XRP has been flying off the shelves. It's definitely getting scooped up at a rapid pace. XRP is making waves lately, and we're seeing some impressive stats to back it up. Wallets and addresses holding XRP have been climbing dramatically. Big thanks to XRP Daily for highlighting this. The number of XRP addresses holding at least one token has hit an all-time high of 6.26 million. That's massive. On top of that, XRP futures trading volume just hit a monthly peak of $21.620 billion, 0 cents. Talk about momentum. Now, let's zoom out and look at the bigger picture. In the last 30 days alone, XRP trading volume soared to nearly $77 billion, 0 cents. And if we throw Ethereum and Bitcoin into the mix, their combined trading volume hit a staggering $700, 0 cents plus billion in just 1 month. The numbers don't lie. Crypto activity is buzzing, and XRP is right at the center of it all. This really highlights the incredible momentum in the crypto space right now. Trading activity is booming, even through stablecoins. Just think about the sheer volume. Bitcoin, Ethereum, XRP, and more are seeing massive movement. Take Tether, for example, $3.6 trillion, 0 cents in trading volume. That's immense. It shows there's been heavy selling pressure, but also a ton of buying. The takeaway, this space is far from slowing down. Now, why focus on trading volume? Because plenty of people are asking, is crypto dead? Has retail completely abandoned the market? Is anyone even still here? The answer is a resounding no. Crypto remains alive and kicking with a massive active community trading around the clock. It's 24/7 energy, and it's exciting to see this level of engagement. When it comes to XRP, it's still stealing the spotlight, dominating trading volumes and keeping the action alive. But let's talk Bitcoin, my main focus this past month. Right now, all eyes are on the chart as we've returned to those critical levels from late March. Back then, we hit resistance hard, which triggered a sharp drop to around $75,000. What I'm watching is whether we can finally break above those highs, pushing us close to $90,000. If Bitcoin pulls it off, the next big target is in sight, around 95 to 96,000. And after that, the long-awaited 100K milestone comes firmly into play. This could really be the turning point. If we get positive news on tariffs and the trade war discussions, this might just be the week everything shifts for crypto. Exactly what I've been hinting at these past few days. But wait, let's talk about Bitcoin sitting on exchanges. I came across a post on X from Martini Guy YouTube, and here's the big headline. Bitcoin exchange reserves have hit their lowest level ever. Yep, a supply shock is on the horizon. So what does that mean? Let's break it down. A supply shock could seriously shake things up for Bitcoin. If demand spikes while supply is this low, we're looking at a recipe for huge price increases. Supply metrics are absolutely key here. Simple economics, right? Supply and demand. And if this plays out, we might see Bitcoin's value shoot up in a big way. How can we tell? Let's rewind to January 2024. Take a look at the chart, spot the January timeframe at the bottom, and you'll see what was happening. Bitcoin had a brief surge, climbing close to $50,000 early in the month. This was fueled by buzz around ETF discussions and announcements, but then came the sell-off. What's interesting is the exchange reserves during that time, despite the drop, reserves kept decreasing as they cascaded. Bitcoin soared to nearly $73,000, 0 cents, even $74, 0 cents. Fast forward to the sell-off spanning March through summer and into September, October, and November. The reserves on exchanges tell the story. They plummeted steadily, mirroring that wild ride. That's what sparked the massive surge beyond 100K. But here's the kicker. While prices have dropped from over 100K to the mid 70K range, take a look at that huge dive in exchange reserves. This signals something big brewing for Bitcoin. It's why I believe now might be the perfect time to keep a close eye on Bitcoin dominance. I have a feeling this next big Bitcoin rally could set the stage for alt season. This could be the moment where Ethereum and altcoins begin to challenge Bitcoin's dominance. And let's not forget XRP could surprise everyone in a big way. But it's not just the exchange reserves setting the stage for Bitcoin's rally. There's another major factor, the Fed's money printer. Some may ask, why do you think this is coming? Well, here's the deal. China, Japan, and the EU have already started printing. Marty Party's already on it, but let's dive deeper. Global liquidity is shifting. China, Japan, and the EU are all increasing their M2 money supply. Yep, the money printers are humming again. But the real question is, where's the Fed in all this? Now, let's connect the dots. We've talked about M2 supply and Bitcoin before, and this is a key signal. With reserves in place and M2 rising outside the US, the stage is set for Bitcoin's next big surge. It's not just speculation, it's math. And here's another layer. Trueflation data from Anthony Pompliano shows inflation at just 1.4%, well below the Fed's target. So why aren't they cutting rates? If they start slashing rates and the US M2 supply ramps up, we're looking at a flood of liquidity into the markets. The pieces are there. The question is, will the Fed make the move? I've been sounding the alarm on this for weeks now because I truly believe it's on the horizon. You might argue, well, we can't just assume this based on what other players like China, Japan, and the EU are doing. But hold on, why not? Think about it. This is deja vu. It's like watching the same story unfold again. Just like in 2020 or even back in 2016, we've seen this pattern play out time and time again. When China, Japan, and the EU start firing up the printing presses, you can bet the Fed won't be far behind. And let's be real, the timing couldn't be better for the Fed to start printing. With inflation numbers setting the stage, the conditions are prime. What better moment for them to pump fresh liquidity into the system than right now? Stocks are still down and the market is practically begging for an injection. It's the perfect storm, and the Fed is likely gearing up to make its move. What better time than now? Speaking of the Fed and interest rates, earlier in April, the odds of a rate cut at the May FOMC meeting skyrocketed to around 55%. In fact, it hit 55.6%. But here's the twist. Now, just 16 days before the meeting, those odds have plummeted to 11%. So what happened? Retail investors changed their tune, the sentiment shifted, and now most people believe the Fed won't cut rates at all. Just look at any recent discussion, it's everywhere. But here's my take. I still believe we'll see that rate cut in May, and once it happens, brace yourself for a whirlwind of activity from the Fed. We're talking more than just printing money or liquidity injections. Bigger moves are on the horizon. With the current state of US markets, there's no better time for the Fed to do what it does best, shake things up and keep the economy in motion. Right now, the market is buzzing with crypto stocks and the dollar taking center stage. The dollar's been tumbling, and while that's alarming, concerns about the bond market are equally pressing. The Fed, they are gearing up to cut rates. May feels like the perfect setup for the Fed to make its move. Why? Because as always, they're behind the curve. Even Trump called them out for being late to the game. Meanwhile, other nations are already printing money and the Fed is about to join the party. Here's what I think. May marks the start of rate cuts, followed by a liquidity injection that'll shake things up. We'll likely see money flooding the market by May or June, sparking a major surge in risk on assets as the dollar keeps crumbling. This could be the start of a fresh bull run, a new wave of growth, an alt season like no other. If the timeline holds, we might be looking at a market peak somewhere around January 2026. This all lines up perfectly and really reinforces where I think we stand in the current cycle. With just 16 days until the next Fed decision, all eyes will be on what happens next. This upcoming FOMC meeting could be a game changer, one of the most critical ones yet. Everyone should pay close attention. Meanwhile, the crypto landscape feels undeniably bullish, especially for XRP. XRP deserves the spotlight right now. The next wave for it could be massive, especially if Bitcoin rallies to 140K between January and July while Bitcoin dominance continues to fall. The stage is set and things are looking very bullish ahead. I'm still thinking the fall will be a turning point. By then, I believe the crypto world is going to see a lot of optimism. Why? Because the current landscape suggests it won't be long before the Fed flips the switch, starts the printing press, and injects liquidity into traditional markets. The ripple effects could be huge for crypto. That's my take. Hope you enjoyed this breakdown. If you did, don't forget to hit like, subscribe, and turn on notifications so you don't miss any of the free content coming your way. Thanks for tuning in. Catch you next time.